Rent control, price fixing, collusion, corporate greed, evil landlords. Those are all titles that have been thrown around, especially in the last couple of weeks. You may or may not have been watching the Democratic National Convention taking place in Chicago right now, but a major plank of the Democratic platform for 2024 is focused on housing. So today on the Great Report, we want to do a deep dive on what that means in reality, what's being proposed, what's may actually happen, what probably will not happen, and does it make any sense whatsoever to help solve this problem of not enough housing in the United States, not enough affordable housing, but do some of the proposals alleviate that concern, or do they actually make the problem much worse with quite a few unintended consequences? We're also going to give you a quick update on the multifamily market and the economy. So if you're an active investor, passive investor, you're in the right spot, because every single week on the Great Report, we break down all the latest news, reports, research related to multifamily, commercial real estate, single family homes, and the macroeconomy to help you make some really good and informed decisions. I'm joined once again by Director of Communications and Marketing here at Gray Capital, producer of the Gray Report, Dr. Matt Bosnagel. This is going to be a great show. He's put a great one together for us. Let's just get into it. Welcome back to the report, Matt. You've put a great report today. It's going to be a great episode. Make sure you're subscribed to the Great Capital YouTube channel so you can get all of these videos as soon as they're uploaded. We've also got a newsletter. Hop on over to greatcapitalllc.com/newsletter. Matt, how was your week, and how are you feeling about all this news related to housing being put on the forefront for the nation?
I think this is a pretty exciting time. I think it is one. It is a little bit scary on the edges when we're talking about price fixing and all the evils that may be happening. But the more that you know about this stuff, it gives you a little bit more confidence. I am pretty confident about the CRE market and multifamily. The only worrying part is perhaps there was a shaky jobs report. Mm-hmm. But I don't think it's as scary as it could be, and I think we're seeing evidence, both anecdotally and from major publishers and researchers and analysts, that the CRE market is coming back, and things are getting a lot more competitive than they used to be. People are seeing more of a chance, or less of a chance and more of a certainty of an interest rate cut in the future, and people gobbling things up. I think it's a great time to buy right now.
Yeah, I think, as mentioned in previous episodes, I think the 10-year Treasury getting down below 4%, I think, was a green light to a lot of firms. I think a lot of folks are back in the market. Yeah. We were pursuing a deal last week, made an offer. We weren't sure of how the market was going to shape up. Usually, we've been surprised, I'd say, over the last two quarters or so, that a lot of prices had been coming in, kind of below what we were kind of thinking they might, which was kind of good on the buy side. But those prices have crept up, and where they had been missing that whisper price, now it seems like those prices are getting a little bit closer to that ask or whisper price that the brokers are throwing out there. So a
real inflection point between the late spring and the late summer. Things have changed that fast. That's crazy.
No, just in the last couple of weeks. And so we've talked about data in the past. But before we get into some of that, Matt, you mentioned the jobs revision report that came out on Friday. Was it this week? Was it Friday? Came out 2 days ago.
Yeah.
Right? Yeah. Came out 2 days ago on Tuesday, I guess. This week's been going crazy. Not necessarily a good report for jobs, but would give us a little bit more confirmation that a rate cut in September is almost certain. I will not say certain, but it is. We're getting closer to saying that. As we did not gain nearly as many jobs as we thought. About 800,000 jobs less than was originally reported by the BLS previously.
So this revision applies to measurements made in like a year ago. It looks like this I'm not sure. Maybe
correct.
Continual revisions are always revised. I'm not sure.
You are correct, Matt. Yeah, it's basically through kind of March of 23 through April of 24.
Okay. Well,
we knew things were slowing down, but they slowed down much more than we had thought.
So listeners and audiences of the Gray Report may remember a few weeks ago in early August. Actually, you don't even need to be a follower of the Gray Report to remember the stock market volatility that we had in early August. And a lot of people were saying it was the Japanese carry trade. Well, we talked about it, and it was shortly after that time, and we tossed the idea around, maybe it's carry trade, maybe it is the jobs report, because that was also in the zeitgeist of the time.
Yeah.
and it almost
it came out around the same day. It was a
Yeah.
weak jobs report, and that carry trade
And then
kind of news started on.
So I said, like, I was more worried about the jobs, and then I learned later that maybe it was the carry trade, but I still, whether or not the specific stock market moves or not, economically, I remained worried more about jobs than about Japanese interest rates ticking up, a little bit or not. That's like the baseline. However, looking
one more technical, and I'd say one
Yeah.
more fundamental.
Yeah, exactly. And I also think that looking at the long-term trends of employment and unemployment, the way that jobs gains are are typically measured, and comparing it to history, for unemployment, it's scary. But if you're looking at actually job growth, year-over-year job growth is trending towards like a 20-year median.
Yeah.
Like the last 20 years, that's kind of where it plateaus around. So there is a question of, is it going to plateau like this and go flat, or is it going to continue to go gradually down? And actually, this is
I think, and that's the concern, right? Is that I think if it stays where it is, it's like that's fine. You know, this is definitely kind of average levels, even below average levels. Let's maintain it. It's the concern that we'll see further job declines, and that we're in a very tight we're seeing very tight monetary policy. It's very restrictive, and that could lead to fewer jobs. As that was the intention, getting the labor market under control, which good job. Looks like it's relatively under control. No one's talking about kind of a wage price spiral anymore. And so in terms of getting inflation under control, this is relatively good news, confirmation that it's been working through the system.
I do wonder, like, in terms of the psychological impact or the ability to kind of grab people's attention when those numbers come out, it's a thing, but then the revisions, it's a little less impact. However, it was covered. It was a pretty big point on,
and they had
for a
been
lot of
making
places.
revisions like every month. They've been revising down, so it wasn't a shock to the system. I'd say. So let's talk about and then I'll move on to the multifamily market specifically in the Marcus and Millichap piece. But how does this jobs report or these revisions affect the multifamily industry?
Yeah, I think that it's worrying because a recession affects everyone, and a downturn, and we have
can't pay rent if you don't have a job.
Yeah, we have been experiencing the negative effects of high interest rates for a long time, and I know it seems like a totalizing view to view everything through high interest rates, but it does seem like things have gotten more expensive for buyers. There's slow activity. Of course, there would be worse job numbers. The same things that prevent a multifamily business to operate are roughly similar when you're talking about financing and keeping your business running for the greater economy. So loans large and small just aren't happening. We talked last week about how home buyers are staying. They're staying in their house just like multifamily buyers and sellers just aren't activating. I would say there is a silver lining for multifamily specifically in that the housing demand situation is so big. It is it's catching the attention of presidential candidates, and it's going to outlast any short-term recession. So the upshot for multifamily is, as we have seen in the past recession. Now, every recession is different, but as we've seen in the past recession, multifamily demand powered through that recession, and housing demand in general was not hit. So if this is going to be the same, maybe that's great.
Yeah,
a recession's bad for everyone,
and
that's
It's typical that you'd see some rent declines during a recession.
Yeah.
Then usually a fast recovery after the fact.
Yeah, multifamily would not benefit from a recession.
Yeah, exactly. That's where some people say, multifamily is recession resistant, and it's like, no, it's not resistant. It's resilient. It can get through. Doesn't mean you can overpay and over leverage and make bad decisions. It's that if you're a relatively smart operator and you are buying right, you are not going to see a lot of growth during that period.
Yeah.
But you can easily hang on and then grow after the fact, and it gets through relatively unscathed. Again, if you're a decent operator and you're not overextending yourself. So
Yeah, I did want to go through, because I did make these charts and I forgot to show them while I was talking about them. Just an example of two ways of looking at this. I did mention, like, is now different than before. So right now, looking at all employees, total non-farm, you see that from the period of basically the year a little before the year 2000 to now, the job growth is about, it plateaus at around 2.6-ish, and that's the number that we are heading towards right now. And the decline in the job growth is getting steadier and steadier, but it's continuing to decline. That's bad news, but it's not horrible. That's the silver lining, and I completely admit a silver lining, saying, I've been saying I'm worried about jobs, and I think that is it will still be a negative signal to the Fed to cut rates. So also moving to unemployment, that's a little bit of a scarier graph. And the unemployment, it doesn't seem to plateau in the same way that the regular year-over-year growth in jobs does. It's always either going up quickly or going down gradually. The thing is, though, we've just gotten past a time where it went down quickly. Does that mean it's going to go up slowly? So, it's like this reverse roller coaster. Usually, the steeps are on the way up and the graduals on the way down. But now we just had a steep drop. So does it mean we are in kind of an unprecedented cycle?
Yeah, that's what's so hard for economists right now, is that the pandemic just throws all the numbers off.
Yeah.
And we've talked about time compression, and it's hard to look at the same time scales. The same. But if you had to, just kind of take the craziness out, and if you were just looking for a recession, you would look and say, Matt, every time there's a little bit of a tick up, there's a recession, which makes sense. Okay, unemployment's rising. That would.
There's a brief part, maybe in like 2003, where it seems like, it went up without spiking up
a little bit.
Without spiking up totally.
Maybe here in the late 70s. I mean, there's a couple points where it's like up and down, a little volatile here and there.
But you have to pick and choose those.
But you really have to, it's like sort of here. There's not really a case of where unemployment really moves up and then a recession doesn't occur. But now we haven't spiked in unemployment. To your point, Matt, we're really kind of just, kind of normalizing, because, we're at the 4.3%, which is up from, when we kind of bottom, kind of 3.4 era, but 3.4 is nowhere to be seen in the last, 50 years or so. We have to go back to 1969 till we see that kind of low unemployment rate. It's hard to tell, and it's hard to. Again, we looked at the yield curve last week as well. That there's a lot of technical ways where one can point to us having a recession. The fundamentals don't really point to a recession. We're going to have to keep watching the fundamentals. We've said on previous episodes, Matt, it's all going to be about employment. And the Federal Reserve probably isn't going to move until they see employment move. And now that employment is moving, the Fed is looking like they're going to be moving. So it's definitely, we have to keep watching it. But the economy in many other areas is, going surprisingly strong, and it is showing a lot of resilience for a variety of reasons. So it's uncharted waters. I guess you got to subscribe to the Gray Report.
That's right.
Type of speed
for real.
Now, continuing on to commercial real estate, Marcus Millichap, a friend of the show, John Shang, put out a nice, really good video, really talking about this idea that the commercial real estate market, it may have just changed, and looking at potentially the idea that, and we've talked about this in the past as well, but prices may have bottomed and have already begun to recover. Matt, here's your take.
And the CRE investment climate for the last year plus has been so sluggish. Spreads between cap rates and debt are really improving. He goes through different sectors like retail, industrial. For instance, CRE overall, the spread is 290 basis points. So cap rates are 2.9% above interest rates. For office, it's 400. Retail, it's 300. And industrial, it varies. He doesn't give specific numbers. But for apartments, and our focus here on the Gray Report, the spread is approaching the magic number of 200. So I guess cap rates are 2% above the 10-year Treasury, which he uses as a proxy for the cost of debt. I know that this is a small section to add, accompanying a larger discussion that we're going to have here about your housing policy and stuff, but I think that it is it is worth mentioning here that the investment climate is changing, and this exciting stuff that was happening earlier in August, and the things that are rapidly happening, whether it's political or not. The story of the revival of the CRE, we could fill a whole Gray report with that. It's just it's a little bit of a shame that a lot more exciting things are happening right now. But this is like a don't keep your eye off the ball. It's something that we're noticing on small and large scale, I think.
It's been slow moving, but I think a lot of the data is starting to come in.
Yeah.
It didn't happen just overnight.
Yeah.
But the fact that the 10-year Treasury, again, as to John Chang's point and your point and my point earlier, getting below 4%, some serious moves on Treasury yields, and just the confidence the Fed funds rate is going to be reduced, again, is giving that all a clear sign.
Yeah.
Because, again, it takes a long time. 60, 90, 120 days to go from we found a deal to getting it closed.
And that's why I do think it's like one single interest rate cut, that's not going to make or break a deal.
No.
But the activity,
they've started the process.
Yeah, and that's what the activity in the market is, looking forward to this longer term implications of interest rates being far lower by the time they kind of get a deal and get things.
You could just have the strategy of just follow the Fed.
Yeah.
If the Fed is lowering rates or keeping rates low, just go buy, invest. They're being accommodative. If the rates are increasing, stop buying.
Yeah.
And if you would have just done that, if you would have just flown with the Fed and not tried to fight against the Fed, well, you would not be, in most cases, not all, in a advantageous position right now.
Yeah. Agreed.
So we're going to see cap rates continue, I think, to compress. Buyers come back in the market, but it's all amongst this backdrop of political tension.
Yeah.
So let's talk about rent control. Let's talk about price fixing, corporate landlords, price gouging. All of these kind of buzzwords and phrases have been thrown around for people to say there's a boogeyman out there. Federal government, come in and save me from it.
Yeah.
Give us a background, Matt, I guess, of some of the most recent developments, and then I'd like to get into some more of the background of kind of how we got here, because it's confusing to someone who sort of enjoys to read about economics and what makes sense.
And fortunately, there's a lot of stuff that's being written now, but also, I just went through our notes from previous Gray reports, and there's a real big paper trail to some of the stuff that's happening recently. Now, what's happening?
You've been covering it. We've been covering it for a while.
Wow, here's another one. Here's another one. And so, what has happened recently was, right now, as we speak, as we're recording this on Thursday, August 22nd. Kamala Harris is set to speak at the Democratic National Convention, but she also spoke last week. Now, at the DNC, she's going to give a talk that's probably not going to cover the specifics as much as this speech she gave in Raleigh, North Carolina last week, which was about the economy and specifically included comments about her housing policy. And this is important. It's not like I'm searching and trying to find things within the speech. Like, it was a major chunk, and it's also a major chunk of her platform. She kind of starts with a concern for housing. Now, the question is this concern for housing going to mean punishing people, labeling them as corporate colluding landlords, or is it going to be more about making supply easier to build, deregulating, I don't know, if it's like subsidies or something, but less punitive and less like trying to, frankly, whatever rent control rules or something like that.
So let's break this into two pieces. So there's a carrot and a stick is what you're saying. And I've also heard this is described as a debate and some head bashing between the political side and the policy side, just within the Democratic Party.
Interesting.
And where the policy side is kind of looking at more practical solutions, and they've identified, as have almost the vast majority of economists. Identifying the solution, the only real solution that has any proven, that has the actual scientific background and data to support that it works, is the construction of new housing and new supply, and that we need to build. And that's the only solution, again, that has scientific evidence and data to support it. The other side is driven by politics and is very politically advantageous. but there's no science and there's no economic support to back it, which that would be rent control or punishing investors and punishing landowners, fixing price, doing their own price fixing of, limiting investment, limiting rent growth, or who can build where. When you limit economic activity, you put price caps on things. That does not increase economic activity. It decreases economic activity. It decreases investment, and as the Democrats also admit, we need further investments into housing. We need more investments into housing. Yeah. If there was so much investment in housing and people were building everywhere, even none of it was affordable, the prices would lower because there would be so much supply.
So as a kind of framing device, a little tangent from the housing into the economy as a whole, that same Raleigh, North Carolina speech she gave talks about like price gouging at the grocery store or other kind of, is like just price fixing in general.
Yeah.
And her allies came out, a few days later clarifying her remarks, maybe walking them back.
Yeah.
Or,
Well, the Washington Post had a scathing op-ed that came out Friday after that she'd announced some of the concepts of price controls and price fixing. It's not just on rents. They're also talking about on food, which actually the pricing of food has actually come down over the last year. It's actually deflated. So again, we've got a solution without necessarily a problem. Not that folks' budgets aren't being stretched, but we're doing things that are not even curing symptoms, will make the problem worse, but they sound good.
So
and they work on a bumper sticker.
Yeah, and it's so, to repeat, she said this stuff about price fixing, and then she walked it back. That to me suggests it's a little extreme. Maybe not going to happen. And there are ideas that we're going to cover here where it's probably true that the more extreme ones aren't going to happen.
Okay.
So we can get into
let's get into what she's doing, and we'll get to the real page piece and I want to get into some of that background. But what is she? Let's get into the details, Matt, of what she's proposing.
So I'm really using this speech as a framing device because you got to go with her words and what she's mentioning, and then we can kind of connect it to real history that has happened. It was actually an effective outline of the larger concepts that she's pursuing, especially, whether it's supply with a carrot or the stick, this kind of punitive thing about collusion and landlords. So she did talk about cutting down red tape and building 3 million new homes and rentals that are affordable for the middle class. That's one of these big planks. I think it's very cool. Maybe one of the more doable conceptually, maybe not numerically, of the ideas here. I wonder about the specifics of that 3 million number.
I really enjoyed your comments, Matt, in the notes prior to this because they talk about some of these. First off, they're on the right track. Yeah. We need to build more housing. 3 million new units would do a lot. Okay, now how do we do that? And some of the proposals, I think, start getting into the details, which you really outlined it in some of the notes, which you can find at greatcapitalllc.com.
Is it next to a town? Is it next to a city?
Yeah, are they markets that need housing? Because you can't just because the country needs 3 million housing units doesn't mean you can build 3 million housing units in the middle of the desert and the problem solved. It's like a local issue, and the problem is it's local ordinances, it's local government, it's local zoning boards, and the federal government can give some guidance, but unfortunately, it kind of probably needs to be a bottom-up issue. I don't know how it even constitutionally can be a top-down issue.
Traced through, and to the credit of I'm sure there is a voice in there because there's talk about the YIMBY. Kamala Harris says this. In my backyard. So there are policy voices within this discussion at the Democratic National
they're all
Convention.
about, hey, let's build more, in their mind, only affordable housing. Let's build more affordable housing. Reality is we just need to build more housing.
Yeah.
And I'll take back what I said. The federal government, there are things they could do. Obviously with the low-income housing tax credit, that's one of the most successful programs to build, affordable housing that we've ever had. Way better than, what HUD was doing back in the day and when we were building projects and the government was managing it. And that didn't work. Some are like, why can't just the government, build a bunch of apartments and manage it? Well, they did that. It was a horrible failure. It made it was horrible. So they could increase the amount of tax credits they give out. They could give more tax credits. They could give middle income housing tax credits. I mean, they could flood the market with tax credits, and builders could just go bananas and build. And for me as an apartment owner, wouldn't necessarily be good because there's all this brand new supply that'd be heavily subsidized
Yeah.
But that would be an actual solution that would work. Obviously, you'd want to be careful. You don't want to break the housing market overnight. But I think that there'd be some bipartisan support of at least like the economics and this. It's at least the economics make sense. The numbers make sense.
Yeah, it is interesting. Like, again, she only has a few minutes to talk, but she says take down barriers and cut red tape. Those may be the most powerful words in the whole housing thing.
Yeah, she's for deregulation.
Yeah.
So and again, that could be a bipartisan thing.
It is going to be this opposition between a local people that are opposed to more housing and a larger, like a neighborhood versus city, for instance, where these decisions are going to be made and someone's going to be unhappy, and that's going to be a lot of the solution right there, is making the neighbors mad for the good of housing increasing in the city. And another idea that she did have is give $25,000 for first-time home buyers. Yeah. I'm not sure. Like, I've heard discussion about how that may just make the prices of homes go up, and instead of like encouraging more supply, that would make the cost of homes go down. But that's beside the point. I kind of want to get into the stick approach, the ones where she's really talking about apartment rental owners, apartment landlords, what she calls corporate landlords. So it is these two paragraphs specifically in her talk that we're going to use as, again, like a frame for a larger discussion about what her housing policies might look like. So she says, because some corporate landlords, some of them buy dozens, if not hundreds of houses and apartments, then they turn around and rent them at extremely high prices, and it can make it impossible sometimes for regular people to be able to buy or even rent a home. Some corporate landlords collude with each other to set artificially high rental prices, often using algorithms and price-fixing software just to do it. It's anti-competitive, and it drives up costs. I will fight for a law that cracks down on these practices. I think she probably delivered that. I know she probably delivered it way better than I did. But this is a pack of ideas that has actually a paper trail, and you can link this to the communications that we've been receiving steadily over the past 3 years from the Biden-Harris administration.
So give us the background. She's talking about RealPage. She's talking about revenue management, essentially.
Okay. Yes.
Whether you know it as YieldStar or there's a variety of different programs. RealPage has several. They bought some. There's a lot out there. Give us the background. We've covered this multiple times, but for someone who hasn't been following.
She is talking about the practice of people. You are a landlord or you're an apartment owner, or you're just or you're property management, whatever.
Give us the RealPage background.
You want to know how to set your rents for your property. You buy RealPage. RealPage is a software service that will give you suggestions on how to set your rent.
Well, RealPage is a company that owns a lot of different property technology systems. In property management software, and it's like basically accounting software to manage how you rent your properties. The leases go in, you manage your rent roll, manage your accounting software. You can manage it. It's a full suite of kind of property management systems, and they offer other suites. RealPage has gone out and bought a lot of different companies over the years, and they've bought several companies that work on pricing intelligence and using information, whether either through their own their data from their property management systems. So their systems are managing properties all over the country, and they're taking that data and they're saying, okay, in your market of Little Rock, Arkansas, we know that the rents for similar properties are going, kind of in this range, and we know the occupancy is kind of in this range, and we know from your availability of units, you have a lot of units available or you have no units available. Based on those factors, we suggest that you price your apartments, this 2-bedroom apartment, in this range. No, it doesn't do it for you automatically. It's a suggestion. You can decline it. You can accept it. It will suggest prices going up. It suggests price going down as well. And it's not too dissimilar to other technologies and other industries, basically using pricing information competitors' pricing information to inform your own pricing decisions. It's not that RealPage says the rents in Little Rock, Arkansas will be $2,000 this month for all 2 bedrooms.
Yeah.
And it gives the same recommendation to everybody. That's not what happens.
Yeah, yeah, no, that's true. But I think, just for not like devil's advocate, but it is. I think the collusion angle of this is this idea that there are multiple apartment owners that are being coordinated by RealPage software to set their rents at a specific. So ideally, the argument goes, these landlords should be competing against each other, and again, in this collusion view, instead, RealPage is making them work together, and in a way that, if I owned all the apples, if me and Greg across the street all owned all the apples in the city, we got together, instead of competing, we just said we're going to set it for $90 or whatever, and that's what they're saying. The handshake agreement is actually happens when you're using the RealPage software.
Without ever actually, meeting your competitor, know that you're colluding. You're just all. The idea is it's collusion through a third party. And the third party is facilitating the collusion on a one-by-one basis. But But again, the difference is there is no agreement for everyone to do the same thing.
Yeah.
When I think of collusion, it's like, hey, we're all going to do this. Got it? Okay, everybody does it, and whoever doesn't, if somebody doesn't do it, you kind of mess up the whole collusion ring, and you can undercut pricing. And there's a couple articles. So often this story gets framed in a context of price fixing and collusion, and then they try to take the reality and fit it into that narrative.
Yeah.
When the reality is different from what you would think of as price gouging or price fixing or collusion, because it isn't those things. Just a quick example. Like there's this Atlantic article, AI entitled "We're Entering an AI Price Fixing Dystopia" by Roger Karma. And in this piece, it's so apparent that they, without understanding exactly what RealPage is or what it does or how many people actually use it, they have their conclusions already made.
Yeah.
And I don't know how many times I've heard recently of people saying it's like, RealPage has like absolute market dominance and everyone's on RealPage and everybody's using. Even the title of this piece or in the kind of the second line, it says, it's like, if you've like rented, a good chance your landlord uses RealPage to set your monthly payment. That sentence, based upon just reading the article, is factually incorrect. Later in the article, they specifically state, and if I find it as, so according to one estimate, where they only have one estimate from NPR, and saying that in housing markets throughout the United States, RealPage has 30 to 60% of multifamily buildings are priced using RealPage. Well, I've got a couple. One, it's an estimate. Two, 30 to 60% is a pretty damn wide margin for error, which means that there's no science involved.
Pretty small sample size.
And then the only actual piece of data, which they discount from RealPage, is that they think that they have around 7% nationwide. Which
but it includes all rental properties, so single-family homes, I'm guessing, too.
Yeah, but in the beginning of this article, they're talking about single-family homes.
I know. I was just trying to give them a little cover.
I know. And the whole point there, no one's just talking about apartments. People are talking about everything. And again, they begin their whole article talking about homes. And so again, from their own research, they know that this is, it dishonest as dishonesty gets. And the way that they characterize what RealPage is doing, again, they have a narrative in their mind and a construct of what is bad. And then they're saying, well, how do we paint what RealPage is doing as doing the things that we want them to be doing, even though they're not doing it?
Yeah.
Like they say, like, there's a quote in a speech from the Federal Trade Commission Chair, Maureen Olesen. He basically says, is it okay for a guy named Bob to collect confidential price strategy information from all the participants in a market and then tell everybody how they should price? She asked. If it isn't okay for a guy named Bob to do it, then it isn't okay for an algorithm to do it either.
That's 2017 too. Just
interesting.
Yeah.
It's 2017. I didn't realize that.
Yeah,
in 2017. The idea that you can't go and figure out what your competitors are charging is asinine.
Well, again, like I think that a lot of this hinges.
It's not confidential price information.
Yeah, yeah. Well, and
It's on the internet.
that's a good point. So for some of these arguments, it hinges on, is this public or private information? And I think a lot of this has to do with how kind of not coercive or how much you really are forced to obey, the quote unquote cartel.
That's the other piece. I'm glad you brought that up, Matt, because later on in this article, you can tell I'm just a little bit fired up because it's just there's so many lies.
Yeah.
And they said basically that's like one ex-employee, a former employee, and former employees, no one's quoted, no one's named, it's just former employees.
You don't want to get outed.
Have said that failure to comply with the company's recommendations could result in clients being kicked off the service.
To me, this is the biggest giveaway, says an antitrust lawyer.
So they're taking former employees, unnamed former employees that have hearsay about maybe what's happened with one client in the past as the biggest giveaway.
Yeah.
It makes no sense. Tell me why, as any profit-seeking company, if you're selling, you have a product that you're selling to a client. It's a SaaS product, software as a service, and they're not using it. You're going to kick them off for not using it, and they're paying their subscription?
Yeah, well, now there are, so I think that it does get into this idea of how much real pay, because there's ways to influence them to use the service without kicking them off. There are ways to like kind of punish,
nudge,
and I think a lot of this it may hinge on how forceful RealPage is with the compliance on, and it may shake out that maybe RealPage isn't banned, but they have to throw up a bunch of warnings and like, remember, you're free to make your own decisions and you will not be penalized for going off our recommendation. That's one option. I do think that there's also two tracks. I'm not sure if we spoke about this before the Gray Report or not. There is a legislative track, and then there's a courts track. Yeah. And what they're trying to do in the courts is they're trying to fit this into traditional ideas of collusion and antitrust, and and they're kind of trying to establish that these landlords are an illegal are colluding again. But then there's also legislation that's seeking to define future action. And both of those it seems like it's shaky ground from my perspective. Matt,
let's say that this is a problem, I think there's no evidence to support that it is. But tell us about some of the proposed solutions to some of the legislation or some of the actions that the court has been taking. And I know that the federal government, the FBI has been going, or FTC has been going after RealPage.
Yeah, so
or Justice Department. Sorry.
That case is, because this is just like an investigation. I wasn't really able to figure out like what are they really going to hang their hat on in their argument. I do know that like that is a track that
they got. You mean it's going to get dropped after the election?
Who knows? All I know is that it is not. They're not in court yet. The trial hasn't started yet. You don't know what the arguments are going to be, but there is an investigation, and I more.
Good thing our justice system is very nonpartisan.
I tend to believe.
Motivated.
Yeah. Like I just have a little bit more data on and more specifics on what this legislative path could look like because of not only the Biden-Harris communications, but there's a couple of laws passed in California that could act as a model of what this price fixing could be. So,
tell us about what they've done in California or they're trying to do.
So one of them is a recently passed bill, actually passed by San Francisco, which is
like a ordinance, for the city.
It's a city ordinance that bans price fixing based on the sharing of non-public data. So that's why I meant maybe in order to do business in San Francisco, they have to make their data public to everyone or something, and just keep their algorithm private. That's one thing. Another example in California is Prop 33, which basically it's very simple. It just means it is a proposition that's like we can do rent control now. And that's it. That's like I read the full text. The full text
We can just control the rents.
Was
we can
all of
just,
the bans on rent?
rents.
All the bans on rent control were crossed out. Like that's our proposal. Like look at what we crossed out.
So when we're talking about at me as a firm. So like okay, great capital. People can see the offices back here. So like if I have somebody, if we have somebody in the office that calls our competitors and says, what are you charging for a 2-bedroom apartment?
Yeah.
What are you charging for a 1-bedroom apartment? And then we just call our competitors and we ask them, they tell us.
Yeah.
Because they probably will. And then I use that information to say, okay, well,
there is already services.
Can I not do that? Is there
saying
I can't do that?
You can go to apartments.com and you can figure out that too. I do. So that.
No, but in my what I'm asking you is so like okay, maybe apartments.com exists, but I've obtained the information from just old fashioned. I've called in. I've walked into the apartment and I've asked them, and they have voluntarily supplied that information.
So in the courtroom,
now,
I guess
I can't take that information. Put it on my computer and say
I think you could.
Equals average. What is the average rent?
Yeah, I think you could, because then they would say.
I know I can't today.
I think that, but you can't exactly ask how many are empty. I wonder if like vacancy information.
So what if I walked in and they told me because they all hey, what's your occupancy?
Yeah, then you're in the courtroom. The argument would be like how.
So that is doing that. That's being proposed as
I'm not a lawyer.
They're saying that's going to be,
to
but they're saying that would be illegal because it's proprietary information.
Yes.
I only have that information because I went out and got it. It's mine. I didn't post it anywhere. And then I've taken that and I've opened up an Excel sheet and I've used a simple form because in some of the legislation we've seen, it says anytime you use any sort of algorithm or computation.
So that it's good that you mentioned that, because the two in the rent control is allowed. You can if you want to. That's the one, and then those California ones are actually less powerful than this one. This is actually a national level.
Is this the Senate bill?
Yes, a Senate bill that was proposed by a senator from Vermont, and then and there was another senator, and we have it up here too.
Matt really likes the font that the Senate
I know
uses.
it just looks like kind of like the Old West, and I didn't know that this is how bills look. And congrats, it just looks nice, good visual. But the actual text is a little. I don't know, maybe.
Anyway, so let's get into the details.
Yeah.
The act may be cited as Preventing Algorithmic Facilitation of Rental Housing Cartels Act of 2024. Jeez.
Okay. So.
Sounds bad.
Specifically, now in the press release of the bill, they talk about how it will make it unlawful for rental property owners to contract for the services of a company that coordinates rental prices and supply information. And the way they describe it here, it's really fairly short. We're talking like 9 pages, and half of them is definitions. Yeah. This is the good stuff here. They define prohibited acts, which include any software, company or software that takes rental data from more than 2 apartment owners, uses computation to process that data, and suggests rent prices based on that computation.
So the story that I just told of me going out and calling or physically going in, hey, what are your 2 bedrooms running for? Hey, curious, how occupied are you all? Mm-hmm. Do you have good availability right now? And I do that I go to 3 properties in a day because that's easy. That's very easy to do. And I get that information and I go home and I've got that written down in my notebook. Mm-hmm. And then I take that. And again, I put it in a blank Excel worksheet, and I just put the rent numbers in, and I've got occupancy, and I just average it out.
Yeah.
And I use that information that I've obtained to give me an idea of where I should set my rent prices.
I think that's
illegal.
Yeah. Well, I think.
But that's what they're proposing.
Yeah. Pretty much.
How the hell am you supposed to price your rentals?
Well, and that's, I think it's worded that broadly to avoid loopholes, but it makes me think about if this law had even more breadth, which makes me think about this Atlantic and how hard it would just be to do that. So as broad as it is, it makes you think, well, that's almost unenforceable. There's a lot of people doing this. There's a lot of people, using computation, getting information. And so it describes acts that are a lot more common than you think. Algorithms are around more and they've been shaping a lot of the economy. In that Atlantic piece, the thing that I thought was interesting was how they say we're entering price fixing utopia. They don't really have a specific solution for it that they advocate for, because it's like it's this acknowledgement that it's in lumber prices, it's in food prices and grain prices and steel prices. And they use an example of gas station prices, which I think is fascinating though.
prices are information. They're data for demand, for supply, for demand, and they can give you indications of supply. Without pricing information, we can't make educated decisions on what we should do in the economy or how individual actors in the economy should behave and where we should set our own prices.
It is scary.
That's why the more information, higher frequency information, it gives you. It can be overwhelming at times, but it helps us. It makes for a much more functioning market and a much more efficient market.
Yeah, I do agree, and I also think that there's
this is anti-science, is what it is.
It's
anti-science.
It's anti-math too, because of
it's
algorithms.
anti-math. It's anti-economics. It's anti-science, and it's anti-common sense.
So, and I also think that it ignores this power of building. You build new apartments, and I think as long as the power of building new apartments to make apartments cheaper is great, remains greater than any power that RealPage could even pretend to have, in the worst view of these people as collusion helpers. I think that's it.
I think that's the biggest travesty of all of this, man, is that this is a distraction from the real solution. We're talking about a Band-Aid that has been, drenched in, in poison. It's not going to solve the problem. It's going to make the problem worse. It's not going to lead to more transparency. It's going to if anything, you would have more consolidation because margins would probably drop anymore, and only the biggest companies could afford to get into the business. And so you would just have mega corporations running it because they would have some sort of regulatory capture on the entire thing, and they'd be fine with rent control because they'd just see it as a big bond, and it would just be, it would be Blackstone, and it would be the insurance companies that would own everything. So instead of the solution is only to add more supply. Full stop. More supply. That should be the only thing that's in the conversation. Not that we can't be open to other ideas, but these are bad ideas.
It's true, and they give this example, and I thought it was really interesting too, of these German gas stations that they both had. They were two different companies, and I think they even used two different algorithms to set their gas prices. And what happened was these, whether you call it AI or whatever, these algorithms actually didn't compete with each other. They learned to work with each other, and so that actually improved the profits of these gas stations by a lot. Now, what makes me think is I don't think there's any news in Germany of sky high gas prices. They figured out a way to coexist. I think there's a natural function within the market that would limit prices from going sky high. And it's not turning off the algorithm. It's building more gas stations or pumping more gas or really, frankly, it is building more gas stations because apart from the price of gas, that's what it is. And so there is this function also within the apartment market. It's not turn off the algorithms. It's build more apartments. Anything else is kind of, and that's the reason why rents have not grown this past year. That's the reason why probably Germany is not a dystopia of high gas prices. It's because there is a function within the market, and the algorithm can only do so much. It can't control everything.
Well, there's no science that revenue management or RealPage or any algorithm has dramatically increased rent across the nation. Has it contributed to more steady rent increases over time? Perhaps maybe it had smoothed some things out a little bit. Again, maybe only 7% of the rental stock is even on RealPage, and then just because you're on RealPage doesn't mean you're on revenue management. That's a whole other thing.
So I would say, as a counterexample, if it was a market or product, whether it's steel or whatever, where it was a finite resource, where you couldn't build more, then that collusion angle, then if everyone's in lockstep, then that starts to make a whole lot of sense. But that's
to your
not
point,
where we are right now.
Through your research, Matt, is that's all happening in the steel industry. That there is algorithms that help price what steel should be bought and sold for. Sure, it is a commodity. Housing, it can be viewed as a commodity.
But steel is not a limited resource, nor is, for instance, grain trading algorithms, or these are things where
housing is different.
Where if it gets expensive, if the evil colluders make things expensive, what happens is more people come into. Now, this is again, the theory is more people will come into that market and make it cheaper because they want that money and.
Exactly. There's a couple points of where the arguments for saying that this algorithm, a RealPage, is destroying the rental market or the economy. It flies in the face of people have to afford these rental rates at some point. It has to be
Yeah.
in the realm of affordability. Now, could you say, is it pushing to the edge of affordability? I think that was happening well before these algorithms were being, kind of used.
Yeah.
It's been going on for, for years, many decades.
Yeah.
It's maybe more in the last decade or so, as, more people have been fixing up older apartments and raising the rents.
No, I still think that it does boil down to supply. Like you said, it's really the only thing that makes sense. The power of greater supply to lower prices is a dominant force here, and and I think that because of the pervasiveness of algorithms, it's going to be really hard to fight their use, and it threads itself through a lot of ways that property management happens in an apartment, and and I'm not trying to welcome the dystopia. I'm just trying to say, like, it's already happening, and like there is a way out. It's by building more apartments.
Yeah, so it's by adding more supply.
Yeah.
Deregulation. It's not. It's just something that sounds scary because it's algorithms and it's AI, and housing is emotional and it's close to everyone. And it's frustrating when the rents are high. It's frustrating when your medical bills are high. It's frustrating when food is high. It's frustrating when cars are high. And all of those things have algorithms that are being used to price. And it's not the algorithms that are making things more expensive. Again, it's the fact that we didn't build enough housing. It's the fact that interest rates were held artificially low for many, many, many years. It's the fact that we've had boom and bust, where we stopped building enough housing. It's through inflation, where we've lost the purchasing power of the dollar. Like, those are legitimate areas to focus on, not Kroger, not RealPage. These are just political boogeymen who it's like what we talk
scary. Whenever we talk about the CPI, it's harder for people to get this full view of like the trend lines. They just know that, oh man, eggs, or oh man, can't you just make it a law that you can't make eggs this expensive? It's easier said than done.
I'm just sick of this anti-science agenda.
yeah.
Anti-economics.
Yeah.
Anti-science. Anti-prosperity. Anti-housing. Anti-people. I mean, it's again, not trying to get political. Just trying to look at some of the facts. Not a fan of either party. It's just one party is coming out and calling for price fixing.
Yeah.
And price controls.
So, with that being said, like I said, that aside I had about people were walking it back. They walked back her idea about price fixing in the grocery store. To me, that is an indication that the more strenuous, punitive, stick proposals of punishing people, I don't think that those are going to fly. It's going to be very hard for them to pass legislation that's worded that broadly. That's the one that's in the Senate right now.
Well, what's the route? There's no one on the Harris campaign that is taking any of this really seriously either, right? This is all just, can we get elected? Brat Summer of Love. Let's get it to November.
I really don't blame them on that campaign for being broad in their
they're running
policy.
a hell of a campaign. I mean, they totally turned it around.
Because the minute you give specifics, people will pick it apart, and any specifics you give, like, that's not how it's going to shake out in the real world.
Just like the few specifics that they did give were really bad.
And that's what I wanted to call people's attention to before. She mentions these in 2 paragraphs, but just looking through my own notes of what the White House has been saying, they've been talking about this for, regularly. There's like 7 or 8 communications and memos and statements from the White House. The most notable about this history, taking it as a whole from these communications, is there were most of them were about the housing supply. There were really only 2, one in March of this year and one in July.
I was going to say, they had been all about supply, and then as we got into the election, all of a sudden, these other price, rent control and RealPage started corporate landlord language. It's because the pollsters, they've taken polls of American people and they were like, the rent's too damn high and I don't like my landlord. And they're saying, how do we incorporate this on the platform?
And so, again, when she used the word corporate landlord, that is a specifically defined term that the Biden-Harris defined as owners of, I think it was more than 200 or it may have been more than 50 apartment units, which is a lot smaller than these behemoths that
Yeah.
own hundreds of thousands. So this corporate landlord there, and the way she even phrased it, oh, they could even own dozens. So that's like, it's a lot smaller companies that she is painting as corporate, and that connects to a communication. However, the most recent communication from the Biden-Harris administration was more on housing supply, and it didn't include anything on, we're going to punish these bad people.
And that's what's frustrating is that
Yeah.
we know that they know what the real solution
you're right,
is because
you're
they've
right.
talked about it.
Yeah.
They've talked about it, and the actual people who are talking about real policy, things that work, it's all supply. It's not rent control. It's not real page. But it's the political forces are the ones that are in control of the ship, and the wheels have been turning for quite some time before Kamala Harris, was the Democratic nominee. Again, I'm just hoping cooler heads prevail. We look at science a little bit, and we get away from the dog whistles. It's the same thing of, on the Republicans or Donald Trump talking about immigrants in the border because they had a poll saying it's like, all right, some of the base doesn't like, doesn't like Mexicans or doesn't like immigrants. And so we're going to do those dog whistles regardless if it's the right policy or not, because, we probably need some more immigrants in this country to actually kind of keep the economy going. And anyway, not to get on, but I'm just saying both because we've been piling on the Democrats and Kamala Harris, not saying that Donald Trump and the Republicans don't do the same type of political stunts, and there's a lot of not great scientific thought and there's bad policy across the board. Honestly, but this one, because the Democrats are always saying that they are the party of science, and then they're listening to, they're following the data.
Well, and we can be facetious too, because like you said, I'm not sure it's that serious. Like the more extreme stuff that we mentioned, again, like probably not going to happen.
But it's like if you're the only policy that you're going to talk, if that's all you're going to talk about, if that's the thing you're going to choose, I mean, I don't take it as super serious, but it's like when you point the gun
and you send FBI
at our industry, and you're raiding offices, again, mostly for political gain, it starts to hit. It starts to hit at home, and that's why we're covering it a little bit more, because it needs to be called out. It needs to be called out for anti-science, for bad economics, bad policy, because it's bipartisanly considered to be bad economics, bad science, and bad policy. So again, Brat Summer all day, Aperol Spritz, a little messy, all that's cool, all good, sounds like a fun time, but like brass tacks, what's the policy? You put it out there, and it is hot, steaming, not great.
That's great. I think we should close on that.
All right. Thanks, everybody. I got to get out of here. Anyway, make sure you signed up for the Gray Capital newsletter. It's called The Gray Report. Comes out twice a week. Thursday, we get a really huge digest of everything that's going on in commercial real estate, multifamily, and the economy. You can go to grayreport.com to sign up. Check out graycapitalllc.com to learn more about what we do, buying apartments, managing apartments, working with accredited investors and institutional investors, having a good time. Leave a comment, and we're going to make some shorts out of this. People are going to rip us up because you can understand why. But not trying to be controversial, just trying to do the Lord's work, Matt. Trying to get the good word out there. Let's go. Thank you, everyone.